You've probably heard it too. Sixplexes are where smart investors go. But in Montreal today, that strategy might be broken. The numbers don't work like they used to, and if you're still using 2018 logic to evaluate 2026 deals, you're in trouble. In this video, I'm going to break down what's really happening with small multi-unit buildings, especially sixplexes in today's Montreal market. We'll look at real listing data, what's killing the cap rates, how financing rules have changed, and what smart investors are doing instead. If you've been eyeing small multis or are wondering why nothing cash flows anymore, this video is for you. Hi, I'm LJ Aguinaga, your Montreal real estate broker and investor. I've bought, sold, and held multiple income properties across the city for over 18 years, and I work with both first-time and experienced investors looking for returns that actually make sense. But here's the reality. The small multi-space, especially 5 to 6 units, has changed. Prices are up, rates are higher, and net returns are getting squeezed from both sides. The question isn't, are there still deals? The question is, are you evaluating them with the right lens? Let's start with what used to work. 5 years ago, you could buy a sixplex in parts of Rosemont, Villeray, or Mercier at $150,000 to $175,000 per door, often with a 5% or higher cap rate and room to raise rents. You'd drop 20% down, finance the rest easily, and the cash flow, although modest, made sense. Fast forward to 2026, most decent sixplexes now list between $225,000 and $275,000 the door, sometimes more if renovated or well located. That's $1.3 to $1.6 million before closing costs. And with conventional rates still hovering around 5% and 5.5%, even with 25 to 30% down, your monthly debt service eats almost all your net operating income. Translation, it doesn't cash flow anymore, not without a very clear upside. Let's talk about financing, because this is where many new investors stumble. When you hit 5 units or more, your financing terms change. It's now commercial financing, not residential. CMHC insured multi-unit loans can take 3 to 6 months to approve. You need a solid net income and often 20 to 35% down depending on risk. Lenders underwrite to DSCR, debt service coverage ratio, not your personal income. There is a hack where you can purchase a property with up to 8 units under residential financing if your income supports it. I'll save that for another video, but book a call with me if you'd like to learn more about that strategy. It's what I personally did with most of my sixplexes. Back to purchasing a sixplex with commercial financing. Here's the kicker. If the rents are low, and in Montreal they often are due to rent control, the income won't support the price. So either you get a smaller loan, or you pay more out of pocket to bridge the gap, and your return gets crushed either way. If you're still expecting to buy a sixplex with 20% down and positive cash flow from day one, you're about 3 years too late. Now, let's look at a real-world example. A sixplex in Mercier recently listed at $1.35 million with gross rents of $66,000 per year. That's 4.88% gross cap. Expenses projected at 24%, so net operating income is around $50,000. At 25% down, you're financing around $1 million. At a 5.25% rate on a 30-year amortization, your annual debt payments are around $66,700. That's a negative cash flow of $16,000 per year. Now, sure, you could maybe raise rents in 2 to 3 units eventually, but the break-even timeline, probably 4 to 6 years, assuming no surprise repairs, that's not passive income. That's a long play with risk. So, you might ask, why are people still buying these? 2 reasons. First, a 1031 style equity shifts. Owners with equity and other assets want to reposition into real estate and don't care about short-term cash flow. Second, long-term renovation or repositioning strategies. If you can vacate units legally, renovate, and bring the rents to market value, then yes, you can lift value significantly. This same property could appraise for $2.2 million once optimized. But those are active strategies, not passive. You need capital, a strong team, time, and experience, and ideally a margin of safety. If you're buying and hoping for cash flow from day one, you'll be disappointed. So, what's the move? You adapt. Here's what we're advising many investors right now. Smaller plexes, think duplexes and triplexes, still qualify for residential financing. This means lower rates, better terms, and sometimes often with better cash flow per door, especially with an owner-occupied unit. Next, deal box focus. Define exactly what kind of asset works. Minimum cap rate, rent spread, value add potential, vacancy strategy. Stick to it, don't chase it. Next, cash flow layering. Buy smaller buildings with modest cash flow, but layer in garage rents, storage, or Airbnb options to lift returns. And finally, partner up. If you find a solid deal but lack cash, look for a joint venture partner instead of going at it alone on a riskier sixplex. So, is the sixplex dead? No, But the old sixplex fantasy, that's dead. If you're not ready to treat it like a business, underwrite it properly, manage risk, deal with Quebec tenancy laws, fund capex, and structure your financing, it will burn you. But if you're sharp, patient, and strategic, you can still make a small multi work in this market. It just takes more planning and less emotion. Real estate investing isn't about what used to work, it's about what works now. And right now, the smart investors are shifting gears. They're tightening their criteria, they're moving with clarity, not hope. If you're looking at small multifamily properties, let's talk. Book your 15-minute investor strategy call. We'll build your deal box, show you how to model your numbers, and help you avoid the most common mistakes in today's 5 and 6 unit market. Even if you're 180 days out from buying, it's worth building your plan now. If this video helped you see the market more clearly, hit the like button and subscribe. We're here every week with real numbers, zero fluff, and boots on the ground view of Montreal real estate. I'm LJ Aguinaga, your Montreal real estate expert. Thanks for watching. Let's build your next move the smart way.